Get ready. This is Crypto Talk with Mike Willis in 3, 2, 1.
Hello and welcome to Crypto Talk. I'm your host, Mike Willis. For those of you that don't know me, I spent 30 years as a trader and portfolio manager on Wall Street. And in 2018, I became a Bitcoiner. Each week, we're going to look at the crypto markets, we're going to look at the stock markets, and specific news that I think actually matters. So let's get into it. First, I want to pull up the Bitcoin chart and see where we stand this week. You guys know we've been on a nice little rally off the bottom here. We're up about 30 to 35%, depending on when we look at this. But what I want to point out here is this crypto winter we've been going through for the last 6 months is very, very similar to the crypto winter we went through in 2022. So the difference is just the steepness of the curve. And normally the steepness of the drop determines the vertical incline. So instead of this long U-shaped valley here before the steep run up, we've had a sharp drop, but if you look, each of these lines are almost identical to what happened back in 21 and 22. So most of you know we've been tracking that pretty closely. Off the bottom here, we bounced off the bottom a few times, and it was about a 6 to 9 month period. So we've only spent a few months at the bottom here, and now we're trending higher. So up 30%. This rally has been nice and sustained. I thought we were going to pull back a little bit here and trend, kind of churn a little bit at the bottom here, maybe even go down and test 50,000. But I'm beginning to think we have confirmed this rally. And I'll go into some more reasons on why I think that could solidify, and we may have put in our lows at 60,000. All right, well, let's go to... All right, now let's zoom in on the 5 key data metrics this week. I'd like to look at a couple of them. Our price, we're sitting right around 79 to 81,000. Our market cap's at 1.5, 1.6 trillion. The daily volume's been around 18 billion. The sats per US dollar, I always like to look at this because most of you know there's 100 million sats per Bitcoin. And for a full hyper Bitcoinization to occur, the Bitcoiners believe each sat will eventually equal $1. And that's a pretty fun idea and goal to have. So we're sitting at 1,265 sats per US dollar. So if that is to turn to a 1-to-1 basis, your Bitcoin investment is going to do quite well. Our money supply, we're sitting at 20 million coins. We just hit that a month ago. And most of you know the $21 million hard stop for coins. So we're in the last 1 million coins that are being produced, and that's always a good metric to take a look at. The fee per block, blocks are running around 9-10 minutes right now, costing about a sat to do a transaction on average on the last few blocks. So that is very inexpensive, low friction, and shows that the Bitcoin is working. So that's a picture for Bitcoin for this week. Let's get into the news. In my 30 years of trading, I can tell you the headlines are consistently changing. So what you have to have is an investment strategy that works over the long term. I like to ask, what's your crypto plan? Because most people don't have one. So keep that in the back of your mind as we look at the news for this week. All right, so the SEC and CFTC jointly classified 16 cryptocurrencies as digital commodities. This happened in March, but the reason I'm talking about it now is how monumental it is. This ended years of regulatory ambiguity. The ruling also clarified that staking is not a securities offering. This is a major unlock for institutional capital. So let's just look at the article here, read a few of these paragraphs. For a decade, the crypto industry faced a difficult and often ambiguous regulatory environment. People simply couldn't tell with certainty whether the assets they were working with would be legally treated as securities, commodities, or something else entirely. That fog is now clearing. So this is the moment the whole industry has been waiting for. 10 years of uncertainty finally ending. I mean, I can tell you this is a huge deal. The SEC has ignored the crypto world. I mean, for 15 years, they basically pretended we didn't exist. And then for 2 years, they went after the industry and basically sued everybody. So everyone got a Wells letter and nobody knew exactly what to do. And it's certainly the institutions weren't going to jump into that mess. So on March 17th, the SEC and the CFTC issued an interpretive guidance classifying 16 of the cryptocurrencies as digital commodities. So this established a taxonomy for most of the other assets in the sector as well. There's a section on that we can look at a little later, but not today. The list of assets include Ethereum, Solana, XRP, Cardano, Chainlink, Bitcoin, and Dogecoin. Dogecoin is on this list. Let that sink in. I mean, they were going after things like Ethereum, XRP, and here Dogecoin is now making it on the list. So Dogecoin is a digital commodity along with the other 15. This is huge regulatory clarity. So let's read a little further here. One of the most important parts of the new guidance is that it clarifies the way the regulators view staking. So if you aren't familiar, staking is the process by which holders lock their coins up to help validate transactions on a proof of stake blockchain in exchange for yield. So this is a big element for what draws capital to, chains like Ethereum and Solana. So staking just became an $80 billion unlock opportunity overnight, according to this article. And I do agree that people love yield. They hate to think their assets are sitting there not earning any interest. And because a lot of people view cryptocurrencies as currencies, they want to earn interest on it. So that's the whole theory behind staking. I'm actually not a big fan of it, but we can talk about that on another podcast. But for now, just know most people love it, and especially institutions like to get that yield. So until now, whether the staking rewards constituted a securities offering was an open legal question that chilled the institutional participation substantially. I mean, basically, institutions stayed away because of this. So securities offerings require a lot of paperwork. The SEC tends to get litigious when the paperwork isn't filed correctly. So once securities are launched in the wild, they're governed by an extensive set of regulations. And the SEC now makes it clear that most forms of staking do not involve the offer or sale of a security, as the tokens being staked are not themselves securities, but rather digital commodities. So this is a much cleaner, this is going to affect Ethereum and Solana because these are staking ecosystems. They rely on this. And both chains now have a much cleaner bill of regulatory health. So one sentence from a regulator just unlocked billions of dollars. That's how fast this market can move. All right. For example, Ethereum has roughly 37 million Ether coins staked, which is about 29% of the supply, 80 billion in value. Solana's staking system is even more mature, 68% of Solana supply, producing annual yields of about 6 to 7%. So 6 to 7% yield on a digital asset with this kind of upside potential. Compare that to what your savings account is paying you, and you understand the draw here. And the banks have really fought fought this because banks are paying nothing, and these cryptocurrencies and even stable coins have yields on them potentially, and the banks are fighting that because they definitely don't want stable coins to have yields. But in this case, these 16 cryptocurrencies, the ones that allow staking, it's not considered a security, so that's a big deal. All right, so institutional capital can flow more freely into various staking services. We read that. For that to happen, the capital has to be converted into either Ether or Solana first, which means you have to buy it, and that's likely to send prices up. I don't know about soaring, but it will send it up. It isn't unreasonable at all to expect these two coins to grow a lot, and they make predictions in this article how fast they're going to go. But this is the part most people are missing. Institutions don't trickle in; they come in waves. So this is a big unlock. XRP is also very likely to benefit from the SEC's new classification scheme, but this is different from Ethereum and Solana. Ethereum and Solana needed staking clarity to soar. What XRP needed was something more fundamental: official permission to exist without the risk of litigation. Ripple fought the SEC for years, and it won, but this is the final chapter of that story because now the SEC has come out and officially said they're a digital commodity. So this is a signal to institutions that the SEC is not going to appeal that court ruling, is not going to re-sue Ripple. And Ripple, of course, owns XRP, so they're one and the same in this situation. But just moving through this, Ripple is the company that issues XRP, spent years battling the SEC enforcement action allegations that it was an unregistered security. And that fight depressed the coin's price, spooked institutional clients. While Ethereum and Solana needed staking clarity to soar, XRP needed something more fundamental. It needed the official permission to exist without the risk of litigation. Ripple is the company that issues XRP. It, of course, spent years battling the SEC enforcement actions alleging the coin was an unregistered security. That price, of course, affected the coin's pricing, kept the institutions out of Ripple. And although the courts ultimately ruled that XRP wasn't an unregistered security under most conditions, now we have regulatory clarity because it's officially a digital commodity. So think of how much value was destroyed by that regulatory uncertainty. Now imagine what happens when that uncertainty is gone permanently. So now the article goes into, can these three digital commodities actually double in price? So Ethereum, at the time this article was written, was at $2,100, Solana $90, $150 for XRP. So a double would boost these three to $4,200, $180, and $3 respectively. So none of these targets are outlandish according to this article, especially if you compare it to prior highs. In 2025, Ethereum hit 4,900, so 4,200 is still under that. Solana reached 293, well above the 180 price target for if it doubled, and XRP had topped 365. So being at $150 now does seem like a relative low now that you have that clarity. So picking up this big new catalyst could very well lead these three assets to double within the next 3 years, especially considering that they will all have had a strong investment before the latest ruling. So this is one of the most important regulatory moments in crypto history. Institutional money that has been sitting on the sidelines waiting for legal clarity now has the green light to move into staking products on Ethereum and Solana. And for XRP, the legal cloud is gone, and Ripple can finally go after the banking clients it's been courting for years. This is not a short-term price story. This is a structural shift in how these particular crypto assets fit into the traditional financial system. So let's go to Article 2. How will the Clarity Act on May 14th today impact Bitcoin, Ethereum, and XRP? Today, the U.S. Senate Banking Committee holds a critical markup vote on the Clarity Act. The vote happening this morning, it's actually happening right now as we talk. For Bitcoin, Ethereum, and XRP holders, this is one of the most important regulatory moments of 2026. A clean pass of this bill toward a full Senate floor vote, potentially around July 4th. And of course, Trump has said he would sign. So the main holdup after today would be the House and the Senate getting on the same page and providing the president with an actual bill. So today is not the final passage of the vote. It's committee clearance. That gate, everything else depends on. The panel splits 13 Republicans, 11 Democrats. So they're saying all 13 Republican votes are needed. One of the ones that are uncommitted, according to this article, the reason he has hesitation has nothing to do with the crypto policy. So one senator who's not even focused on crypto could actually derail the whole thing. So Congress heads into the Memorial Day recess on May 21st. So according to Cynthia Loomis, she's warned that if we miss today's vote, that this could actually push the bill to 2030. I don't actually think that's the case. There's too much momentum behind Clarity. So threatening that today's vote would delay it another 4 years seems a little saber-rattling to me. The White House is targeting a July 4th signing to get there. Today's markup, then 60 votes in the full Senate floor. Then they have to reconcile with the House-passed legislation to come up with the final bill for the president. So this is the difference between a rule and a law. And keep in mind, laws stick, memos get reversed. So the reason this is a big deal is for Bitcoin especially, turning the administrative guidance into federal law is what's at stake here. So let's read this paragraph. I thought this was really good. Bitcoin's commodity status was never in question. This bill, what the Clarity Act delivers for Bitcoin holders, is a conversation that administration classification into federal statute. So something no future administration can undo with a regulatory memo. So this is a big deal. You don't want a situation where from administration to administration, some unfriendly crypto administration can come in and write an executive order or a memo that would change everything that preceded that. So getting this into a federal law is a big deal. Now for Bitcoin. Now for ETH, the staking certainty is the headline win. And we saw that on the last article. But reading forward here, Ethereum's gains here are structural rather than immediate. Commodity confirmation under the Clarity Act provides the legal basis for staking ETF products that institutional allocators have been waiting to file. So then it goes into a couple price targets for Ethereum, basically saying a clean Thursday markup reverses some of the institutional hesitation, reopens the DeFi development pipeline that the bill currently protects. So Citi cut their Ethereum target specifically because of slow Clarity Act progress. So today either is going to reverse that or confirm it. All right, so let's take a look at XRP. XRP carries a more direct exposure than either Bitcoin or ETH. The SEC and CFTC jointly classified XRP as a digital commodity in March. That was the article we just talked about. But that is interpretive ruling by the SEC and the CFTC, subject to reversal by the next administration. So this is similar to the benefit to Bitcoin holders. This Clarity Act writes into statute removing the regulatory overhang from the SEC's enforcement action against Ripple. So that enforcement action has been keeping the banks and other custodians out of the Ripple space. So banks want to use XRP, they just need the legal cover to do it. This morning's vote and what's happening right now could unlock and put in stone their status. So the last part I'd like to just show here, what do the poly markets show? It's about 62%, the odds of passing, and I just pulled up a live vote right here. It's sitting at 70%, so it's gone up a little bit. This is a vote that turns regulatory guidance into federal law. Right now, Bitcoin, Ethereum, and XRP have commodity classifications, and these classifications can be reversed by the next administration. This bill would lock it in permanently. So that's one of the huge benefits of the Clarity Act. And even though Bitcoiners really think in general that politics is a puppet show, it does influence us. There's a lot that their little puppet show, a lot of problems they can create for us. So having this clarity vote and the pro-crypto components of it, and locking this into federal statute is a really good thing. This article talks about how Bitcoin could get an additional $15 billion in inflows, and Citi is projecting if this Clarity Act passes, Bitcoin will rise to 143,000. So sitting at 80,000 right now, that's a pretty good return. For Ethereum, it unlocks their institutional staking products that have been sitting on the shelf on the sidelines waiting for legal clarity. And for XRP, it removes that last piece of regulatory overhang that has kept the banks from committing capital at any scale. So that's our second article. The last article I'd like to we'll briefly hit on this, but essentially, so Google just published research showing quantum computers could break Bitcoin's encryption sooner than anticipated. No computer can do this today. Google's most advanced chip is like 100 or so qubits. But the gap is closing faster than anyone expected. One researcher put the odds of quantum computer cracking a Bitcoin private key at 10% in about 6 years. So that's up from what was expected before. But the article talks about, let's just read the first paragraph and we'll go into Google has just told the Bitcoin and cryptocurrencies industry it is less time than it thought to prepare for the quantum computing influence on its cryptography. In a white paper published last month, Google researchers demonstrating that it could require only 500,000 qubits to potentially crack the cryptography. And the big news there is that's roughly 20 times less reduction from prior estimates. So, but it's still at 500,000 qubits. We just talked about how right now they're up to roughly around 100 qubits. But the real story is that Bitcoin is not dying. It's a story about Bitcoin needing to evolve and the clock moving faster than expected. The encryption that's protected every wallet since 2009 is built on cryptography that quantum computers are getting closer to solving. But think of it this way. Your money is at a bank, and people are saying, don't put it in Bitcoin because quantum computers can crack it and steal your money. Well, think about this for a minute. The cryptography behind your Wells Fargo bank account or some of your other bank accounts, wherever you keep your bank, you think that cryptography is better than Bitcoin's that has held up to all hacking over the last 17 years, and it's an open source code? I would guess that long before quantum computing cracks the Bitcoin cryptography, your bank accounts are a lot more susceptible to risk. So my position is cash in banks will get drained before cash in Bitcoin. Secondly, quantum computing, as it advances, can also give the cypherpunks and the Bitcoin coding community time to beef up the cryptography. You can use quantum computing to make the cryptography better. That's part of what they're doing behind the scenes. So as technology rises, so does the cryptography for Bitcoin. That's a no-brainer. So when they throw out this quantum computing is going to steal your Bitcoin, well, yeah, it can still, that's a threat, but it can steal your cash in your bank account too. And my guess is these old TradFi banks are going to give up your dollars a whole lot faster to quantum computing hacks than Bitcoin will, because you've got the whole force of the Bitcoin community behind it. So those are the stories on my radar for this week. Let's move over to some of the market data, TradFi versus DeFi. I like to take a step back and look at the broader market, because keep in mind, anything that's happening in the traditional markets will influence crypto. So let's pull up the S&P 500, see what's happening in the traditional market. So for the last month, up 8%, about the same for the year. Year to date, 1 year, the S&P is up 28%. Check out Bitcoin, down 24%. So the spread on a 12-month basis is massive. This is over a 50% spread. Would you rather be up 28 or down 24%? TradFi is definitely one on a trailing 12-month basis. On a 3-year basis, you have the S&P 500 up 23%. You have Bitcoin up 190%. That's why you're in this. You're in crypto for these big jumps. You just have to be willing to go through these crypto winters, is what we're going through right now. So that's the macro picture for this week. Now let's wrap it up. So 30 years on Wall Street has taught me a lot of things. But the biggest lesson crypto has taught me is that old rules are being rewritten in real time. And on that note, we are wrapped up for this week. I'm Mike Willis. Remember to keep one eye on Wall Street and 2 on crypto.
That's Crypto Talk with Mike Willis. We'll see you next time.